This panel is going to be a little bit different. It's more about how to make money and what's going on in terms of new methodologies of raising funds. What I'd like to do, if that's all right, is actually have participants, it's a great panel, have the participants introduce themselves. That'd be fine. Just a bit about what you're doing in the space and connect it to it, if you could.
Hi, I'm Kingsley Edwards, and I created a gaming company in 2013. I got into Bitcoin in 2012, and basically we created a skill-based peer-to-peer platform where players can play popular video games against each other for Bitcoin. More recently, we started working with casinos directly, and a couple months ago we got acquired by a company called Unicorn that has a licensed esports book. And it kind of we had to kind of take a step back from Bitcoin and blockchain tech as we started working with casinos. But interestingly enough, Unicorn is also interested in the space. So we're kind of revamping our platform, and we're going to be launching some cool stuff soon.
Hi, is this thing on? Hi. My name's Steve Waterhouse. I started working in Bitcoin in 2013, I think it was, 2013. I started a group at Fortress focused on cryptocurrencies, and we spun it out to become a fund called Pantera. And we bought a bunch of Bitcoin, and then we invested in a whole bunch of companies. I was on the board at Bitstamp for 3 years, and most recently, last year we did the seed round in Zcash, Civic, and Brave, and also Polychain. Last year I left to spend more time with family. Kitesurf. To just basically pursue my own interests. And over the last year, I've been working on a new startup, which is in stealth. And we just finished our seed round of financing. So it's in the token space, so I feel qualified to tell you how to make money-ish.
Just a little more quiet sort of in the back. Shh. Thank you. Thanks.
Hey, I'm Chance Barnett, most recently founder and CEO of Crowdfunder, co-founder technically, brought a couple awesome people on. Equity funding platform. I was intimately involved in Washington, D.C. on both the legislative and regulatory side of equity crowdfunding laws and the Jobs Act. Worked on the Hill to circle support. Also set the first meeting with the SEC on behalf of the Crowdfunding Industry and Regulatory Association, April 20th on my birthday, 2012. That's how I knew I was becoming a finance geek, but I haven't always been in finance. But really the last 6-7 years, I've been focused on how can I marry the worlds of technology and finance. Prior to that, 3 other startups. One in the online publishing space, helped build direct-to-consumer audiences and groups, identifying great markets in search, and then building great digital products around that. Building that platform, I also became a writer and a speaker myself, learned from some really incredible people, and then became a best-selling author in 2 areas, entrepreneurship and relationship and dating advice. That was an interesting, amazing experience and run. Bootstrap business, had a partner in that. It's still around today. Haven't worked a day in 9 years on it. Pretty awesome. Did something in the ad tech space, focused on the product side in early days of Facebook when the application allowed you to do all kinds of gamey, interesting stuff. That was a small acquisition to an ad tech firm. Done a few other things. Most recently now I have something I'm doing with Eric, co-founder of CoinCircle. We're effectively creating an investment bank for the token sale space, focused on mature companies, existing transaction streams, great venture backing, real models already in the world, and tokenizing those companies and allowing people to be a part of that ecosystem. Also really excited about building great fund products in that space to help a larger set of institutional investors come in.
So I'm actually losing my voice, so bear with me.
But you sound sexy.
Thank you. Ooh, it does sort of. It doesn't sound like me. My name's Eric. Hi, everyone. I'm the CEO and co-founder of CoinCircle. Let's see, I can go all the way back to when I got started in my career in the .com days, but I won't do that. My last company, I started building smart glasses, and we were acquired by Snapchat. which was pretty cool. And then Snapchat came out with a product called Spectacles. I started a early stage venture firm called Hyperspeed Ventures. I've invested in everything from rocketry and microsatellites to genetic editing and quantum computing. I got into Bitcoin in like 2011. I just got really interested in it. I thought it was a really cool space, and I started mining back then. And I, mined a few altcoins as well. And then, started looking at what was happening in the ICO space and with Ethereum. I was an early investor in Unicorn, and had a conversation with the CEO, and it just made so much sense to build a token called Unicorn Gold for Unicorn. And so we spun up CoinCircle for that to be our first project. And really our vision is to tokenize the world. So we want to find really great companies to work with that have existing products and services, and to really, credible teams, and to find like hidden channels of value within those products or services that we can tokenize and do token sales for. So that's essentially what we're doing. And thanks.
So I don't know if it's best answered. I'm assuming that it's this unicorn.
That's right.
Okay.
That's right.
Can you tell us about the token sale? I won't call it an initial coin offering. And you're not going to hear me.
ICO is banned from the dictionary.
I don't know why I just said that. Try it again.
Which bit?
I'll do the. Do you say ICO?
ICO.
But in any case, if you could just tell us a little bit about the genesis of the token sale and how it works and what the token's about.
Right, so I think we announced it, when was that, about a month ago or so. And like Eric said, CoinCircle's been helping us. Unicorn's been around since 2014. Some of our investors are Mark Cuban, Ashton Kutcher, and we've basically, we're doing the token sale to kind of for Unicorn Gold to be the esports betting token. And there's a lot of reasons for that, especially because gamers, they operate, online, they interact cross country, and we're really excited about it. I'm kind of at a loss of words, but Eric, if you want to expand on it.
Yeah, I mean, the genesis was that Unicorn has this internal point system called Unicoin, and it's more like an old school virtual currency or virtual point system that's attached to user accounts. And they're using that internally, but it didn't, like, there's no liquidity, there's not there's not ability to sell it in exchanges, so it's sort of this like untapped asset. And
turned over 250 million already of the internal currency, right?
Yeah, exactly. Yeah, they've done over 250 million transactions with the traditional, point system. And so when we started looking at it, we're like, wow, this would be incredibly cool if this was a token, if this was a coin, and there could be liquidity for the users. It would add a whole bunch of value for the platform. It would add value for the users of the software, and it would help the company grow and capitalize additional features and just like, it's a win-win-win across the board. And so that's basically like where the genesis of it came from, was when we realized like everybody would enjoy it, from the users to the people buying the token, being able to use it on the platform, and it, then we could sort of separate out this old school, virtual currency system and create a token from it. So
Yeah, greater engagement reward for the people participating on the platform, both within the platform and out. I want to get a sense of your background so we can hone what we're saying and asking. How many people here are following token sales? Okay, I would say, yeah, I think. Oh, who has actually purchased token sales other than?
Yeah, we don't say invested, Steve. We say buy.
Yeah. Who has donated funds in return for a token that is clearly not a security? All right. You can say, you just have to put it in the right context. Okay, that helps out a lot.
Yeah, how many people hold Bitcoin? How many people hold Ether?
That's interesting. There's a lot of Ether holders that are not Bitcoin holders. So I think that most of us get a sense about what's going on in token sales and that. There's a lot of companies of greatly varying quality on white papers that are either ingenious or, qua. What is this about? And what's the new functionality and utility? Sometimes cooperative, sometimes either seemingly to inform Peter Pan on Silicon Valley, or not Peter, Pied Piper on Silicon Valley, or following that model. But a lot of really great and American-based companies, whether it's Brave or Civic or what have you, with some very interesting token sales that have been going on recently. You guys have a sense, I'd like to get an idea of what you think is going to happen the next. These people are planning token sales themselves, and they're probably looking at a 3-month window or a 6-month window to get that done. So I want to ask, what do you see is happening in the next 3 to 6 month window, to the extent that you have any sense at all about what's going to be getting offered? Is it going to be more the same? Is it going to be going in one direction?
I have a couple ideas, but I also want to just do a quick historical because we're talking about white papers. There's a reason why these are happening. It's pretty interesting. I was just rereading The Age of Cryptocurrency recently. Some of you, I don't know, were around when there was a newsletter and some guy named Satoshi said, hey, I'm creating a currency based on cryptographic proof, and he laid out a white paper. So this was actually the first one for Bitcoin. So things have kind of evolved and followed from that. Who here thinks they know who Satoshi Nakamoto is, by the way? Yeah, Steve does. Yeah, I love that. Okay, we got another Steve. The Steves don't know. I think there's a lot of things happening. Everyone and their mom is talking about doing an ICO. Actually, my friend's mom actually asked about ICOs the other day. But the thing I'm most excited about is what infrastructure can we build? Because it is the 1995 of the internet right now. And so it's dial-up modems. We don't know the problems are going to be solved or who are the winners are going to be of a lot of different spaces. But there's everything from banking to lending to finance to trading to creating new markets. I'm really interested in the finance space. I think over the next 3 months, we're going to continue to see the proliferation of token sales coming out. And I think the harbinger of it is the platforms that are listing, the exchanges. Whether you're Smith and Crown and you're getting bombarded, the rate at which they're receiving submissions is incredible and they can't handle it. The exchanges can barely get people on, and there's actually a whole side market of paying a lot of money to get your token listed there. So we're seeing this incredible surgence. And then if you just look at the data, I think it's more than 1.3 billion raised since May in this overall market, which is starting to outpace venture. Already is. So I think that's going to continue. I don't think we're going to see a regulatory foot in the door quite yet. And I think I have some decent information from folks around Treasury, OSTP, that are intentionally saying, look, we know we want to do something, but we're not going to step on this right now. Can't guarantee anything like that, but those are some of the conversations happening from the legislative and regulatory side. But the SEC can also have, what was that? We don't need to mention names. But that's not ironclad, and the SEC also has an appetite of its own to regulate things. So it's its own institution. But like I said, the most compelling thing I think is, look, there's tokenization of existing businesses, there's building infrastructure, and then there's really, really cool ideas like what Steve is doing. And we're going to see all of those. I'm excited to see a balancing of the market so it's not just new ideas that don't have products in the market, to start to see more mature companies that have products in the market help people buy assets that might be a little easier to judge the value. And I think it can also reduce some of the potential volatility if you have a token that's being sold that then has trading and activity. So I think that's part of what's going to happen over the next 3 to 6 months.
Yeah, I hope that the future of the next 3 to 6 months is much less about speculation and more about utility. And, just hopefully it won't just be, throwing up a website, putting up some faces from LinkedIn, and putting up a white paper that you can barely, go through, and then throwing up an address and then raising money. So I hope that, we're at a point now where more mature companies come into the space, and it's really focuses on, how the token's going to be used and why.
I have no idea.
I'm sorry? You have no idea?
No idea.
Yeah. Well, it's there's the interesting question of the outlier where you have either regulatory action, especially if it was against the exchanges, because I think that would actually be more cooling than if it was against any particular company. And then you have the outlier of what happens if you have a Mount Goxian explosion of one of the ICOs, just making everybody else feel like that investment might be more risky. My sense is, though, that there will be chilling effects if something like that happens. But I think I think the box is open, and nobody's going to get this methodology of raising funds back and gone. It may go more overseas. It may get more domesticated. It'll go certain companies that maybe can show more about why their token is worth a certain amount or might be worth a certain amount, because nobody's really been offering a lot of good analysis as to why their tokens are worth what they are. So we may get to see more of that. But I definitely don't think it's going anywhere, regardless of the amount of regulatory scrutiny or action that would happen. What are the sort of getting away from your own efforts? What are the token sales and companies doing token sales that you find fascinating for one reason or another?
Well, I'm biased because I'm an advisor, but I think Polkadot is one of the most interesting projects right now.
Why is that?
The team, I think, is very good, notwithstanding the recent parody drama. But I think the concept of connecting blockchains together so that you can easily move and interoperate between them. Essentially, this is the idea that Blockstream had way back, it's only a couple of years ago, in the context of Bitcoin. But doing in the context of smart contracts and being able to, easily move liquidity and move contracts between different blockchains, I think, is a very powerful one and important because, back when it looked like Bitcoin was going to dominate and a lot of people thought that, we were just going to add more and more features to Bitcoin, everything's going to be fine, and then it became really clear that the core development team was never going to let that happen, and probably rightly so, because if you think Bitcoin's gold, you don't want to screw up gold because then everything screws up. And we saw this recently with the SegWit drama. And someone came to me and said, hey, I think there's going to be kind of a coin for everything. And I was like, you're out of your mind. What are you talking about? He's like, yeah, there's going to be coins everywhere. Like everything you see is going to have a coin. But now this also makes sense. And I think now that makes sense, you can say, okay, well, how do you actually connect these things together? And that's what I think Polkadot is doing.
Eric? I'm sorry, Eric, it sounded like you had a...
Yeah, no, well, so...
Love to hear from you.
Yeah, I was actually, right before you said that, that's exactly what I was thinking. So, yeah, you kind of...
Okay, then pick a different one.
No, well, so, I mean, sort of to address that, the earlier question and connect it with Polkadot, and there are a couple other projects that are similar to Polkadot, but I think the interchangeability of different tokens and coins and cryptocurrencies and being able to enable that will be really, really big. It'll be in a very important stage and step for the industry because if you think about it, really you can tokenize almost anything, whether it qualifies as a regulated security or whether it qualifies as a virtual currency or whether it qualifies as a utility within a product. You can basically tokenize almost anything that you can imagine, and what that does is it creates this massive parallel channel of value that is it's not a zero-sum game. It's an additional pocket of value that's being created. And right now we've seen crypto grow to $100 billion market over, just a short period of time. And I think that if you look at the exponential rate of that growth, that's only going to continue. And I mean, I've estimated it just back of the envelope, back of the napkin estimation. I think it's a $100 trillion opportunity. And so it's going to be projects like this that enable that growth to happen, essentially.
So what needs to happen within the ecosystem? And I think probably staying with you because you're building part of what needs to happen in the ecosystem. But what needs to happen in the ecosystem for this to happen? I mean, we used to talk, I remember in 2013. It is funny, by the way, if people haven't been in the Bitcoin blockchain crypto space. When we talk about 2013, for a lot of us, it feels like 20 years ago, right? But we were talking a lot back in 2013, what needs to happen in the ecosystem for there to be widespread cryptocurrency adoption. And now I think we're talking about, okay, well, what needs to happen for there to be widespread support for token sales and manageability and a sane, a more sane flow of transactions.
Well, I think if you look at like one of the big black swans that everyone's worried about is regulation. And so what would be really cool is if we came together as a community, and I've been talking to some colleagues and some people that are joining our team about this, is can we build tools on the blockchain so that we can self-regulate? Like why do we want why do we even want to talk about regulators? Like why can't we build prediction markets that can predict the credibility of a project, right? Like why can't we create tools that enable the community to self-regulate so that we automatically have credibility and trust within the system? And I think the answer is we can do that, right? And we can actually, we don't have to be worried about scammy projects if we, the whole concept of a decentralized autonomous organization, like, being able to vote and, being able to allocate capital, it puts the power in the hands of the community. And if the community can self-regulate, then I don't think we have to worry as much about that particular aspect, right? And so I think like that's the really cool thing about this space is that it democratizes, everything becomes democratized, and centralized control no longer becomes.
Yeah, amen to that. I think that's an amazing vision. And I also want to compliment it to say, I feel like I'm a fanboy now. I guess I am. Satoshi Nakamoto also wrote, what we need is a currency based on cryptographic proof, not trust. And that's largely in a lot of ways what's been built with Bitcoin. That's one of the things I think is needed in this space is now that we have cryptographic proof, we also need some trust. And so, yeah, we'd like to see ourselves as people helping bring a sense of trust to, hey, this team's vetted. They have venture backing. They have these people on their board of directors. We've audited the token from a security standpoint. So we're looking at building that whole set of trust now that there's already a foundation of cryptographic proof. And I think there's really cool distributed ways to help build that trust. And then there's people who will create nodes that help do that in a lot of different ways. And that can be distributed through a DAO, or it can be a centralized, quote unquote, investment bank model like what we're talking about. I think we'll see all kinds of permutations.
I think
I was just going to say there's an education component to this as well. So I don't know how many gamers we have in the crowd, but I was working with the Nevada regulators to legalize and regulate the esports industry in regards to gambling on professional video game matches. And now, with Unicorn, there's going to be another component of that with educating them, the regulators on blockchain. So it's just at least with Unicorn and Unicorn Gold, we're not really trying to use blockchain to skirt any regulations. We really want to promote the technology and be able to use it worldwide in regulated environments.
So Kingsley, as you're looking at this, and as Unicorn's looking at this, you guys had to make a decision. Do I want to do this in the United States? Do I want to do it someplace else where I'm not going to have, there's some very, very successful Slovenians, and there are very smart people, and obviously a lot of people are in Switzerland. And I get this all the time with clients because they want to do something, and there's not a clear picture about where they are in the spectrum of regulation, and they think, well, maybe I need to go overseas. Have you been dealing with that question, and sort of what was your thinking on it?
Yeah, and it seems like the trends change every week as well, so it's hard to keep up. But yeah, especially for us being, we have one set of attorneys that are focused on the gambling side, another set that are focused on the token sale. So it's a lot to figure out, and basically it's just best guesses at this point. But we're ensuring that we're going with kind of the best teams to help us get there. Right now, it's still pending whether even we can even accept U.S. But we really want to. Yeah.
It's a hard and interesting thing where you're an American company, but you're afraid to take American donations. I'm curious because you must get the questions all the time running into companies, and Chance, you've got a long history of helping startup companies try and write in crowdfunding, and for looking at their different options and how to execute it, and the pain factor of different kinds of regulatory compliance. What have you been telling companies in terms of how they should be? Should they be here in the United States? If they are here, should they be focusing their marketing efforts abroad?
Steering clear of legal advisory in this market, full stop, for now. Maybe that's something we take on as what we do kind of changes and morphs into more of a banking and advisory role. Right now, we're just focused on token sales, and I think it's a case by case. But
There's a great law firm, Perkins Coie, and
and Adam's a well-qualified person too.
No, thanks. I guess Perkins bought it, so it's very nice. And they are a smart and wonderful law firm. We work with them a lot. When you're looking at, there's been a few models now. I think Civic did an offering that was about as conservative as it can be in terms of the larger pre-sales and then really trying to democratize sales after that. Ethos did one where there's a huge chunk at first, I don't know, $150, $160 million end up getting raised, and then I think daily distributions after that they can get purchased into. This is way different from Gnosis, right? I gave a small chunk in a very strange, what they called the Dutch auction, which to me didn't resemble Dutch auction at all, but that kind of son of blitz raise, excuse me. I'd love to hear what anybody thinks about the different models right now, of what makes sense and why in terms of issuing your token.
Yeah, it's actually a really interesting area to look at, right? From an economic perspective, like just from like the economics of how it works, and how each token sale and raise is being structured differently, right? And of course, there are like the legal aspects of it, but then there are also just the structural components of like, do you sell everything at a flat rate? Do you, is there some sort of model that where you try to do like a Dutch auction or something like this, but one of the things that we're looking at, I think that's really important is to have transparency, in terms of how the token sale is structured, and then make, it's the cool thing, I think, is like to enable the community to sort of price the token in some way, right? So, so the buyers of the token are establishing what the price of the token is in a transparent manner that makes sense. And then, from an economic perspective, there's a demand curve that then gets created. Barring the irrational exuberance that may exist at some, during the limited time frame that some of these sales are taking place, assuming that economics actually works, you can price a token in a way where at some point, as the price goes up, like the buyers start to, the number of purchases start to become reduced. And so we're looking at doing something like that for the public sale for Unicoin Gold, and we haven't really announced exactly, but it'll be within some sort of price limits that make sense. And that are fair and that still allow for a lot of growth in terms of the number of tokens that are being sold and also the growth of the company as well in terms of like where the price is starting out at the floor, where the price can end at the ceiling, and then as it's traded on the exchange, sort of like looking at the transactional volume of the company, how much liquidity they need to hold tokens in order to enable feature sets that are happening within their platform. And so it's really an interesting thing to model and to look at, and it's really, I think, on a per project basis. There's, it makes sense to some degree why each one is different, but then it also comes like then you start to look at, okay, well now there's a smart contract that has to do a lot of this logic, unless you're doing, it depends on how you're doing it, but typically there's a smart contract that needs to implement a lot of this logic, and then then you're worried about building the smart contract and the security of it, and making sure that it's can't be hacked and stuff like that. And so in that respect, you want to make it as simple and easy to execute as possible. And anyway, so there's a lot of things to consider when it goes into building that structure, and also just the gas price of the execution of each contract. So.
Well, and I think we're going to be seeing also where the tokens are actually representing something in the real world. The one that's coming to mind is one that I worked on where we're taking the gold of England from Her Majesty's Treasury, from the Royal Mint. They've been minting gold coins for 1,100 years, and what we'll be doing is through a client of mine, BitGo, we've made a blockchain that the coins are actually going to become tokenized, such that you get a certain amount of gold represented by the tokens, and then that's going to initially be traded by the Chicago Merc, which has been around for 200 years, which is kind of fun. But it's interesting because then the question becomes, how do I roll that? We know what the price is going to be because it's tagged to the price of gold, but how do we roll it out? And at what times to different traders in different communities to make sure there's stability, to make sure that things are going right, to make sure that there aren't unforeseen issues, not just technologically, but just from a consumer standpoint, whether it's an enterprise consumer or an end user. And I haven't seen a lot of that yet, but I think there'll be some innovation there. I want to ask Steve a question. What I have been seeing is that more and more people realize that a proper token sale tends to be inexpensive and arduous, and there's a lot of work that goes into it, and legal fees and other fees. And so what they need to do is actually go raise funds to actually to then go to try and do the token sale. Does there seem to be a market developing for that? And I ask just because you, for a while, were doing the larger investments.
Are you saying, is there a market for seed rounds, essentially?
Yeah, but seed rounds specifically targeted at token sales.
Okay. Well, as I said, my project's in stealth, but I speak from recent experience in that there is demand not just from crypto-specific specialists, including my old fund, but also more standard venture firms. And there's a lot of angel investors in Silicon Valley and around the world who are very interested in funding projects, essentially in what you call a seed round. The SAFT note, the Safe Agreement for Future Tokens, which was developed by Marcus Santori at Cooley, Juan Burnett at Filecoin, and Naval at AngelList, and has been sort of adopted and changed. There isn't really a standard one of those yet, but that's the instrument that people are using to raise money in advance of a future token sale.
Like I said, it's not a zero-sum game, so you can like from a financial engineering perspective, the multiples can be like really great if you do something like that. Assuming you're able to just like continuously capitalize a company, add additional value through the creation of a utility token that adds utility to the product or service that the company is building, and so it creates additional channels of value that then like increase the value of the company theoretically as they move forward. And so assuming that they do. Like if you do equity financing and you do token sales and you're kind of doing them in parallel together, you should be able to accumulate larger amounts of value through the process of building a company. And like that's a really exciting thing, I think.
Well, it also might bring in investors that can help guide, make sure that you're doing things well. Somebody bounce ideas off. It's interesting because you're getting these hybrids. Where you're acting like party's acting like a consultancy or an investment bank or an early angel investor or all these things. It's been interesting. I want to open it up to questions. I know I've still got more, but is there somebody running around with a microphone? All right.
Hello. My question is, what suggestions and advices would you give to blockchain startups who wants to make their own ICO?
I've got some suggestions. I think the most interesting part of this new model is the ability to fund open source protocols that, and I can tell you from experience of 4 years investing in the space, many of the things that are now going through token sales came to me a couple of years ago and said, hey, I've got this great idea to do this. And I was like, I love it, but there's no way I can invest in that. That's not venture financeable. Right? It's not going to be a product anytime soon. There's no revenue model. I don't know how to invest in this. And then we did Zcash, which didn't have any model either, but we could see, I like the idea of anonymous cryptocurrencies, so I could see how we could do that, but that was a stretch for us. But if you go back to, say, something like BitTorrent, to create BitTorrent today, I mean, it was great that Bram wrote it in his basement and it became successful, but it was sort of an outlier in terms of things that succeeded. Today, we're creating things like BitTorrent all the time, and done a whole bunch of things that are nowhere near that kind of class of project. So to me, that's the interesting part of it. In terms of kind of suggestions, to me, it was just like, people say, you know, what does this year feel like? It feels to me more like in the late 90s when I first went to Silicon Valley, and I kept bumping into all these guys with MBAs, and I was like, what's an MBA? And I had a PhD, and they're like, well, you need this in order to start a company. And I was like, why? And he goes, because you have to write a PowerPoint. And you needed this PowerPoint, you needed this amazing Excel model that explained to everybody how much money you're going to make. I was like, I have no idea how to do those things, but you know, I can write code. Now it's like 2017, and the new PowerPoint is the white paper. So just because you can write a white paper, just because you can, you know, write it well or write it badly, as an investor, I used to be an investor, as an investor, I'd be looking more at who's your team, what's your idea, what major markets are you going to displace or create, and the kind of old school questions of venture financing, but with the realization that your primary mission is to create an open source community around your idea. And if you can do that, like Bitcoin did, Ethereum did, other things have done, Apache, Linux, so on, then there's a good chance that your token will be successful in the future.
Thank you.
Can I ask sort of a little bit of follow-on question to that, which is, do any of you think that if a company didn't want to have the code in open source, it would still be an interesting token sale and attractive?
No.
No.
You want to qualify that?
Sure.
Okay. The point of this stuff is not to raise money. The point of this stuff is to develop new open source protocols that give us something that we can build a new internet on. Okay, so get out of the idea that this is a get-rich-quick scheme or an alternative way to raise money. We already have great ways of making money. There's a wall of money in angel and venture in Silicon Valley or everywhere else. It's not that hard to raise money anymore, even before token sales. This money that is raised in these big token sales is endowment financing. It's not venture funding. Ideally, the token goes up and the tokens that the thing holds become worth more, but maybe not. So what you're doing is you're financing an open source nonprofit. So like $500 million isn't actually that much, because at like, 5% returns, I'm sure some people can do better, that's $25 million. That's not that much financing for a large scale project. So you kind of like change the way you think about it, and it looks kind of different.
And also, I'll qualify my no a little bit as well, and to agree with everything Steve said, but also, if it's not open source, the transparency is gone. And so, that's a huge part of doing this stuff is like people are funding you, but they're putting a ton of money into it. And, they want to know, like all, you can put information in a white paper, but the smart contract actually has all of the real, execution of the contract that the purchase that you're making. And so, so that's a really important aspect as well. And that's really, I think, a big driver for that. Even if it's just a token with no additional utility or no new protocol, like just assuming like there are some like that, you're still creating like an internet of money, right? And you're still creating like an internet of theoretically interchangeable tokens in the future. And so there's still a value there, I think, and different at different exchange rates and stuff. But without it being open source, the trust and transparency is removed, and so that's a really important aspect of it.
Yeah, thanks. That's a good explanation. It really is. Next question. Yes, please.
I had a question about using tokens as a utility, and specifically when you use when it goes to market and the token itself starts to increase in price. How are the economics with that when you have clients or customers, they want to buy in to use the casino, but the token keeps going up?
Hey, well, this is like Bitcoin pizza, right?
Sort of, yeah.
Yeah. Well, the answer is, it's like Bitcoin pizza, meaning that, the amount of Bitcoin you need to buy a pizza has changed over the last 6 years. And so similarly, the amount of tokens you need to gamble in a casino is going to change. Now, there are other ways to think about this. Let's say you can look at one of the deals I did was a company called Abra, ABRA, which essentially provides wallets on cell phones, but the currency is stabilized. And so you are sent Bitcoin, but it's with a forward contract. So when you send it, it looks like dollars, and the other person can choose to receive it in pesos or whatever. So you can imagine, I think what you're saying is, if things are volatile, then how do you market that to consumers? Is that what your question was? Mm-hmm.
The question is, how does it end up getting used if it's one token for a use, but that price goes way up? Now it would seem like that it costs too much for that use. That's in fact if the token is tied to the use.
Seems like that would be a bad way to design the token.
That would be a bad way, yeah.
So I wouldn't. No, so imagine like, what's the Golem's distributed game, right? So Golem's like, hey, I'm some scientific entity and I want to fold proteins, right? It's like this complex scientific problem. So it's a divisible problem, so you can give it to Golem and they can put it on all these different computers, right? And so the company that wants to do that work on the Golem network has to buy a certain number of tokens, and Golem tokens, in order to get that work done, right? But the amount of money that they pay each of the computers is dependent upon the amount of work that each of those computers do. So it's like CPU bound and memory bound and all those things, right? So some computers get paid more because they do more work, and some computers get paid less because they get paid less work. So it's not like one piece of work equals one Golem. It's just like, it's like a function of what gets done. So some jobs are more expensive than others, and so on. So I think it's more like thinking about what the token means as a currency that's in return for some reward or action or work.
And also, I was just going to say, like, I think fractional transaction, like, you can transact fractionally. It doesn't have to be one token as one draw. It can be, up to 16 digits of precision, like, floating point or double precision values can be. So you can transact like 0.00001 token, and so like the exchange rate of what a draw costs versus versus the amount of token that you're spending, like so it would kind of be a best case scenario if you bought a token and it went up in value, right? Because then you could do more of those draws, right?
He doesn't have a microphone, so he can't hear it.
He was saying
one-to-one
that
pegging.
might require that it would peg to the U.S. dollar. Not necessarily. You want it ideally if there's a market around it and you want trading and usage. You want people to be exchanged for a dollar, but it doesn't necessarily have to be pegged. But there'll likely always be a dollar equivalent value. Now, if it goes way up, people are getting more for the conversion into that. Ideally, what's happening with Unicoin is there's an abstraction from the market token versus the Unicoin points that it's converted for. So that abstraction actually helps protect you in a way. You might think about an internal point system or a fixed amount that you can convert to. That's one model. But you also want to think about where you price it initially and where you think it'll go over time. You are going out and you are creating a market value by the structure of the token sale. So you want to think about what price range, where do you want this trading over time? There's other factors and how the market treats it.
But let's dig into this for a second. In Golem, if I have a Golem token, do I know how much computational power I can run with that right now? Not in Golem. Is that because the people that are offering their CPUs and cycles get to put a price on it?
I don't know how they price it. I think, isn't it in Golem they have like a secondary token, which is a function of, I'm pretty sure there's a secondary market. I mean, kind of what you want is something like a little bit like gas, where, it's like dependent upon the transaction. But I always imagine in these distributed computing things, and I don't know if Golem does this, but that you kind of run some kind of function which is cryptographically secure, which kind of measures your computational capability, bandwidth, storage, memory, and that's kind of like a signature that can then be traded against the Golem token as well. If you see what I'm saying? So there's actually a market for there's a market for your capability, which people can then use as an indication of like, okay, where should I send my work? And that market for capability allows that node to bid and say, hey, I'm willing to price my thing at X.
So you are speaking, though, to something that we look at from the legal perspective, which we ask ourselves, how much does this look like something that has utility in functionality of the system, or how much is it just a payment, right, for something that's designated? And there's a different question about, is it a good way to design a token for usability or what have you? But if one thing I always like to ask, I say, if you wanted to, could you take your token out and put Ether or Ripple in there? If so, it begins to look a little bit more like a payment for whatever the underlying mechanism is. If you say that you're going to buy a certain number of impressions for time and eternity, or a certain number of cycles, or that the people holding those get to price it out, then it begins to look a lot less like a fiat payment, right? I mean, that's the way we're looking at it anyhow. But it's a really interesting question. And I do think, though, there is one thing, it might be a bad way to design a token, but if the price got too high, right, like who would want to buy these impressions or run these CPU cycles for $1,000? It'd be insane. So suddenly that price will go down. And the speculative overhead would then, you imagine, get reduced by just macroeconomics. All right. Who's running around with the microphone? Okay, please.
All right, so I have kind of maybe a pushback follow-up on the response that purchasing these ICOs or token sales is building the future of the internet. And the reason for that is that when these companies are launching these ICOs, they then sell the Ethereum, Bitcoin, whatever, and then now they have fiat, right? So in my head, I'm thinking, okay, you're building the future of the internet with Ethereum, but you're selling the Ethereum for fiat. Can you kind of...
Okay, what do you pay your rent? Do you rent a house or own a house?
Rent.
Okay, what do you pay your bills in?
What do I pay what?
Your bills with?
Fiat.
Okay.
Right. No, I get that, right? But you're saying you're building the future of the internet, right? So people are saying, hey, Ethereum is the future of the internet. That's because it's a technology you're going to use to build the internet, but you're selling it to buy fiat to then build your startup, right? Which is so I'm trying to merge that conflict.
I don't get your question.
Well, I think it's a transition, right? So, I mean, it's about $100 billion market right now, cryptos, and like I said before, I see it as at least $100 trillion opportunity. So if you're at the very beginning, right, you have to bootstrap that, and this is part of the bootstrapping process, and we're still in that phase.
If you could pay your entire team and your rent in whatever token that you sell, that would be amazing, but good luck. You can pay with Ether or Bitcoin, and you could trade your own token for that and then pay with it. That would be cool. You wouldn't have to come out and into the fiat market. You see a lot of people holding cryptocurrency who don't want to come out into the regular market. Counter to your point, that's actually what's driving a lot of the funding in cryptocurrency of all the token sales. People who are early owners of Bitcoin, early owners of Ether have appreciated massively, and they're dumping $1 million to $5 million into anything that moves. They're trying to diversify what they're doing. But these people are using it to pay people to develop, like in the case of a protocol. You have to pay that labor, and they're not all going to take Ether. But the point is that you're also holding a reserve of that token of your own, both on your balance sheet and for your community, and to continue to redeem in the future.
So I totally get all that. The question is, I guess, to clarify on my end, is the future of the internet. Is it built on top of Ethereum? Do those startups need to buy back Ethereum later on? Do they need to have more Ethereum in order to build that tech, right?
I think you're going to see a lot of different protocols, a lot of different blockchains, and a lot of different use cases and tokens. And there's going to be infrastructure ones. There's going to be finance ones. There's going to be blockchains of blockchains, like what they're looking at with Polkadot.
Yeah, I don't think it's necessarily the future of the internet, but it's like the internet of money, right? And so blockchain
it's the future of the internet.
What's that?
It's the future of the internet.
Well, okay, it's
Can you define that or expand on that?
Actually, if we could, I'd love to get it to another question because
it's what the internet looks like in the future.
So
I think the internet started out as a distributed place where it wasn't centralized. The first message sent from university campus to university campus under DARPA. It was not a centralized place. We've built this entire system now going from a very decentralized network with not a lot of certainty to a lot of certainty, but way less decentralized. In fact, ISPs and cable companies are now taking our data and selling it. The reason I got into the internet and love it and only work in the internet is because it's more democratic and ideally it's more centralized and it's peer-to-peer. That's what I love about it. If you can do good or if you have proof of doing good, you can do work and you can get profit from it. I love that. So what we're building now is a pure system to get back to that time of what the internet really started out to be.
The best analogy that I've heard is from one of my friends, Bill. He basically makes the analogy that that blockchain blockchain is like the TCP/IP. To TCP/IP to telcos, blockchain is that to like transactions, right? So and then if you look at if you really do an analysis on blockchain technology and not necessarily worry about Ethereum or what the particular protocols are that are developed around it, then that's probably something more to look at than to sort of just like ask that question in a more specific sense.
Yeah, just to kind of not give you the smart ass response, but I agree with exactly what you guys just said. And just think for a second about how centralized all of the things that you use are, whether it's Google Apps, Facebook, your ISP, there's all these kind of pieces, Twitter, it's just, everything is run by centralized entities. And I started doing peer-to-peer back in 2000, I had a little startup that I sold to Sun and then built decentralized storage systems there. The vision there was, we're going to decentralize everything, it's going to be awesome, but we were missing something. And when we added currency, and the cryptographic component, suddenly it all sort of makes sense again. And the plan is, you get people to hold Bitcoin, you build like an alternative, essentially reserve currency system, and then you start doing applications on these things. In the beginning of that is Ethereum. We're starting to see other different variants that have different characteristics. But if you can start to decentralize things, you get rid of this trusted third parties. And as Nick Szabo says, trusted third parties are a security hole. And I think that if we have more decentralized systems, we'll have a better world. And you and I can have a beer and talk about what that means.
Someone should do an ISP and create mesh network and allow us to have tokens for our own internet access. That'd be great.
Other questions?
Yes. Will the people in the back please silence it for a minute? Very quickly, two things. One, what would you recommend the best place to be, onshore or offshore, with a new offering?
You should probably engage a lawyer for that question.
Okay. But my real question is, with the recent volatility of the currencies, especially the lead currencies, would it be smart to develop one that would be from the get-go much more stable and not so volatile and so appealing to the quick buck artists?
Well, I think there's a trade-off between decentralization. You don't have a central regulatory authority or central bank controlling the currency, ideally, in the distributed, decentralized cryptocurrencies. So inherently, you get volatility. And that's what's happening and has happened in the market. If you tried to introduce a way to say, let's have a central regulatory body administer and take in and take out tokens from the system, it wouldn't be what we're using. It would be a centralized authority. We already have a private centralized authority in this country for our fiat. It's called the Fed. No thanks. By the way, that's highly volatile too. It just comes in longer track cycles, about 8 to 10 years. I'm sure other people have answers too.
More questions?
Yes.
Yes.
Hi, Alex Akiyama. This panel mentioned that we now have the ability to sort of tokenize everything in our world around us. I think, Adam, you mentioned, you're bringing the gold of England into be tokenized. So my question for the panel is, what currently that hasn't been tokenized do you see as sort of the next thing to become digitized and tokenized? And then the second part of that question is, what do you think should be versus what will be the next thing?
Energy credits, syndicated paper,
Water rights.
Look at the virtual economies inside of computer games. Like, just think about that. There's billions and billions and billions of dollars in virtual economies inside of computer games, just untapped.
I'd really like to see what like Hernando de Soto has talked about. He's been working with the guys at MIT. Is Brian still here? He probably knows about it very well. Where's Brian? Hi, Brian. And I think that the sort of water rights, land rights, and I'm very much like one of the reasons I got into this space was just the idea that maybe you could really change the world from getting the developing world to get banking and land rights and all these kind of things. I think it's fun to make money, but it's also really fun to do something that feels good, right?
This is a really cool company, and I think one of the great things is these companies that have been coming out are like, back in programming we used to use something called genetic algorithms. The idea that you take something, you create 10,000 slightly different versions, and some will work, and you just don't kind of quite go, wow, I couldn't really
That's
thought
really
of that.
comforting for investors, right?
Yeah, that's called early stage investing.
Well, I got to tell you, angel investing is a lot like that these days. It's, it's 10,000. I don't know, something ought to work. But I mean, I remember Consensus. There was a conference 2 years ago where one of my favorite companies where they were doing sort of localized energy credits. So the problem is you have a village in Tanzania, and it wouldn't take much to create a solar power plant, but it's a lot of money for them. And yet, because of the way it would work, it would pay itself off in 5 years, not 20 years like it might in the United States. And so what they were using is blockchain. They created their own energy credits where people were basically bought. Well, energy credits might not be the right way to describe it, but basically syndicate that financing to people all over the world who could then actually get paid back as this solar power plant would be operational, right? And so the people in America and other places would profit. The village would get something they would never get, and in a country that doesn't have that kind of banking capability. For all I know, the same need is here in California or in Mississippi or someplace else. And I think one of the great things about building the platforms for this, just like you're building eBay and Facebook and what have you, is it creates a platform that all sorts of other companies then can create wonderful opportunities that we hadn't even imagined before.
Yeah.
I didn't like that question at all.
I like that. I was actually going to add.
There's no such thing as a dumb question.
You guys are speechless. How do we mitigate the effect of massive trades? For example, cyber warfare causing economic threat through massive trades. Like, for example, the rumor that George Soros had done a massive trade to try to affect the price of Bitcoin, or even faking the death of Vitalik to affect the price of Ethereum. How do we stop those massive swings?
God, I hadn't thought about faking Vitalik's death in order to short.
No,
That's a great idea, by the way.
Someone did it about a month ago.
Oh.
Yeah. I have no idea. It's more liquidity. I'm not a finance guy, so you guys probably know better than me.
But it's a really interesting question, though, because I've heard people say the future of warfare is cyber, and I've also heard other people say the future of warfare is economic, and this is literally the convergence of those two, right? And so there will be crypto-economic hackers, crypto-economic warfare that starts happening, and established cryptocurrencies that may try to affect the market price of new cryptocurrencies and all kinds of really interesting things that happen in the future. And I think, how do you stop that in regular markets when there's some sort of black swan event that happens? I mean, if it's fake news, that's one thing. But you see stuff like this happening all the time, like a Tesla engine catches on fire somewhere in Norway or something, and then all of a sudden the price of Tesla goes down,
we are out of time. Although Kingsley wanted to say something, if I could.
I just wanted to say real quick, just to your point that the market has the opportunity to be like $100 trillion, and right now we're at less than 100 billion. So I think with the rise in that, we're going to see much less volatility long term. So
I was also going to say check out Unicoin Gold if you haven't. Yeah, .com. Read the white paper. It's the future of esports, and we're really, really excited about it. And it's
way over.
Yeah.
Way over. We want to thank everybody's patience. And I think if you guys knew these guys as well as I do, it's an incredible panel of highly talented people with a fortune of experience. So if you're here for any amount of time and you get to talk to them, you'd be very, very, very privileged. I want to thank you and thank our wonderful panel. Enjoy. May the fork be with you.